Welcome, dear traders. You are watching a recap of the Asian session. Today, the US inflation report holds the spotlight. This is why investors are unwilling to take any risks, especially after negative news from Wall Street yesterday. The US stock indexes declined on a Wednesday. Sentiment in the Asian stock markets also turned sour. The stock exchanges of Australia and New Zealand began Thursday with a moderate drop. Only the Nikkei showed the opposite dynamic, stubbornly going higher. And today, speculators are anticipating US inflation figures as they might provide clues about the Fed's future plans for monetary policy. According to the FEDWATCH tool, 86.5% of traders believe that in September the regulator will keep the key rate unchanged. Risk aversion was also driven by worrisome news from China. As the economy is cooling down, the government has not taken any steps to boost it. The country faces a monetary policy wall of worry as its economy slips towards a deflationary spiral. It leads to worsening conditions in the manufacturing sector and the labor market. It affects wages too. After Joe Biden imposed new restrictions, geopolitical tensions between the United States and China are mounting again. The order authorized the U.S. Treasury Secretary to prohibit or restrict certain U.S. investments in China's entities in semiconductors and certain artificial intelligence systems. In response to this move, China's Ministry of Commerce promised to take retaliatory measures. Beijing said that the U.S. government should respect the principles of a market economy and fair competition. Safe haven assets resumed growth amid escalating geopolitical tensions, especially the US dollar. Apart from that, it climbed amid strong macro stats and hawkish expectations. Concerns over the banking sector and economic uncertainty in China also become tailwinds for the US currency. Investors are flocking back to the US dollar as China's economy is losing momentum and the likelihood of a soft landing in the United States is high. In the Asian session, it has hovering at monthly highs, near 102.50 versus its rivals. Since last Friday, the US dollar index has risen by 0.5%. Although it has slid into the downward range of 102.40 and 102.60, its trajectory will mainly depend on a fresh economic data scheduled for today and tomorrow. On Friday, the US dollar is highly likely to log its fourth consecutive weekly increase. As the greenback has been dropping for the second session in a row, the yen has taken advantage of its weakness. After a prolonged downtrend, the yen may rebound soon. The Bank of Japan is expected to slowly abandon its soft stance and become more hawkish, which is positive for the yen. Besides, the Fed is likely to end aggressive tightening in the near future. In addition, inflationary pressure is easing in Japan. In July, the producer price index advanced by only 3.6% year-on-year, and the lowest level since March 2021. It means that the central bank may revise its policy. Despite the fact that the US dollar was trading rather sluggishly on a Thursday morning in anticipation of inflation data, the yen failed to climb, and the dollar-yen pair broke through its four-week high of 143.90, hitting the resistance level of 144. The yen lost its gains following an increase in the yield of US Treasury notes and concerns about the Bank of Japan's stance after positive reports on producer prices. At the end of the Asian session, the pair was moving in the range of 143.60 and 144.10. However, trading unfolded in the bull zone. An uptrend is likely to prevail. Moreover, the yen also remains under pressure due to rising oil prices. Japan is a major importer of crude oil. A jump in oil prices, as well as the strengthening of the US dollar, pushed the yen down. Meanwhile, growing oil prices helped the Australian and the New Zealand dollar recover. In addition, the People's Bank of China again set its daily reference rate for the managed currency at a stronger than expected level. The Aussie, the yuan's liquid proxy, rebounded from a two-month lows, settling at a 0.6555. Moreover, hopes for additional stimulus measures from China are still fueling optimism in the Asian markets. The risk-off sentiment somewhat limited the upward movement of the Aussie. Nevertheless, the AUD-USD pair was trading buoyantly in the upward range of 0.6524 and 0.6564. The New Zealand dollar was rather volatile today. It managed to bounce off 0.6035, its lowest level since June 8. In the Asian trade, the Kiwi broke through three pivot levels: 0.6060, 0.6070 and 0.6080. However, it failed to consolidate at the last one, rolling back to 0.6065. Now it's moving in the channel of 0.6046, 0.6083. Its trajectory will depend on the Wall Street sentiment and the movements of the US dollar. And that's all for now. Subscribe to our channel and keep close tabs on the market developments with us. See you soon!